Welcome, this is the Speculator, and I will be going over some trade psychology today. I want to document a little bit of how my trading mental state reacted to some of the conditions that were present in the market this week. And at the same time, I want to put together an objective analysis of some of my thoughts, my emotions, and feelings that I had this week while I was trading the markets. Um, I want to go ahead and start off. Let's start off on a good point. I want to play a little song here that I actually like, that I like to share with everybody in a little bit. But let's go ahead and start off here with the first point, which is, for me, the most dangerous emotion I have, I think I've said it before in a couple other videos, is a sense of euphoria, especially after going through a period of consecutive winning trades. Euphoria, typically, in my experience and in my history trading the markets, when I've let euphoria take over my mental state and how I feel and how I make decisions, it'll typically lead to larger losses than I would typically be accustomed to, being that once I allow euphoria to take control over my trading mental state, I let my ego take control as to how I decide to take profits from the market, and it never works out. So that's why I record the things I'm feeling and everything on this video blog as part of my trade psychology objective analysis process, because if I don't do so, I tend to let these emotions take over, and it doesn't turn out well. So being that I gained 1,025 pips between October 9th and October 14th of this past week, I want to make sure that I'm able to objectify my feelings and emotions that I experienced while trading the markets in the previous week, so that way I can better serve myself in keeping a sense of emotional trading stability around my around the decisions that I do end up making every week. So going into that, I'm happy that I made, I earned these gains. I've worked really hard in doing so, but I have to make sure that I stay as stable as possible in executing my future decisions in order to build upon these gains. So that's the first note I had made for myself. Well, actually, that was one of the latter notes that I made throughout the week, actually. If you look here, you can see this week was a busy week. I took a lot of notes. I took a bunch of trades. I can't even fit it all on the one screen, but these are all the notes I made. And as you can see, the highlighted entries are what I'm going to go over today in the trade psychology video blog. But before we go into any further detail as to what I want to record in this trade psychology, I want to introduce everybody here to my Facebook page. The website is www.takeyourprofits, or I'm sorry, that's the website, but the Facebook page is facebook.com/takeyourprofits. If any of this information that I publish here every week for myself helps you guys out, let me know that you like it by going to the Facebook page and clicking on the like button there to let me know your appreciation for the free information I do publish. Believe it or not, there are people that charge thousands of dollars for the information I'm allowing you to peek into here by looking into my trading desk. So, again, I'm not interested in making money off of teaching people. I'm in the business of making money trading. So going into that, there's this cool little show on HBO that I like, and I think is pretty cool, and I think you guys should all take some time watching it on your off days. And they got this song that I think is pretty awesome, so check it out. Made in America. How to make it in America. So yeah, that song rips. I'm digging it. I'm digging the show. I watch it when I'm trying to take some time off the markets. But at the end of the day, here we are. Got to get back to work. So going back to my notes. Again, here was that last note we were talking about. The gains that I made this week coming off of, I think it was in August, I had a period of some substantial drawdown. I had 9 trades in a row that lost. It was my turn to take that drawdown back then. And, here's proof of staying committed and consistent and disciplined with the execution of my trading strategy. It works, no matter what, whether I'm in drawdown or whether I'm winning. I stay true to my trading plan, my business plan. And this week it just turned out where it was my turn to make substantial gains to bring that equity curve up again, and I took out 1,025 pips. So I'm happy. I'm happy for myself, and my thing though in recording all this shit is just making sure that that I stay consistent with the execution of my decisions. I stay disciplined and I stay committed to my plan. Because it is profitable, so long as I keep doing that, so I record it to just ingrain it into my mental state in an objective way, that if I just stay committed and stay disciplined, I'll keep going where I plan on going. Going into next couple of issues here as to the trade psychology I wanted to go over. I scroll through the internet pretty frequently, and one of the things that I was thinking about, because I was just looking at some of the statistics put together by my Pro Trader dashboard. Online I've noticed a bunch of different blogs. They have, different sources of information. They tend to have this rule of putting into their trading plan that only trade on Tuesdays, Wednesdays, and Thursdays, and the reasoning behind that is to allow to get a gauge of the market on Mondays. So they avoid trading on Mondays, being that it's the start of the week, and then they avoid trading on Fridays, being that typically Fridays tend to lose volume, lose market participants, and judging the direction of the market it will be more difficult because of that in their view. However, I'd like to point out, maybe taking that approach works for a lot of people and their systems and whatnot. But I'd like to point out that being that I developed my dashboard with a mathematical expectation of finding out exactly what was working for me and exactly what was not working for me, I took the philosophy of saying that no matter what, whether it was 6 days from Saturday, no matter when I got a signal, whether it was Sunday, Monday, Tuesday, Wednesday, Thursday, or Friday, I was going to take that signal because I needed the data to record into the dashboard so I could get a mathematical expectation as to what was going to work. And every time, the issue is that I felt that if I wasn't going to take a signal, it was going to make it harder to judge what signals were more accurate than others. So based on that information, like I was just questioning, why would you not, if you saw a good opportunity to make money on a Friday, right, why would you not take a signal on a Friday? So that's why I developed a philosophy of saying, forget that idea of only trading on Tuesday, Wednesday, or Thursdays. If I see $100 bill on the sidewalk on Monday, I'm going to pick up the $100 bill from the sidewalk. If I see it on Friday, if I see it on Tuesday, if I see it on Wednesday, right? And then after the series of 100 trades or however many trades I've taken this year that I've actually logged into that spreadsheet, the Pro Trader dashboard, I was able to actually come up with an exact report that told me what was working. And going into that dashboard, check this out. Let's look at this right here. This is why I don't understand, like, why, I mean, maybe it works for other people, but, I don't know why you would eliminate two potential trading days to take probable opportunities to make money in the market. Why you would eliminate a Monday or a Friday or a Sunday, for that matter, from potentially trading and making money. If I don't know, here's my data. My best trading days is Friday. And being that my only real concern when I take these trades and I make these decisions to execute my trades, my only concern is dealing with the what and when of trading the markets. What to trade and when to trade it. And that's what my rules of engagement clarify for me by putting me down a narrow path of tradable opportunities within this market. Because the overall philosophy for me is that the only thing that the market provides is an opportunity to make money. I don't blame none of my losses on the market, because it's impossible to do so. Like, how could, the way I look at it is, if I lose money, how could I blame that on the market? How could I blame that on, other participants in the market hunting my stops, as some people like to say, or squeezing my shorts? I don't believe in the term short squeeze, because it just puts people in a mindset where they find, where all they're doing is looking for an excuse or a reason as to why they lost. And the only reason as to why I take losing trades is because my analysis was just incorrect, and it wasn't in line with what the market was providing at that point in time. So the only way I could figure out what exactly the market is providing for me is by recording the actual probabilities and the recording the actual statistics to come up with the probabilities as to what is actually working. And for me, my mathematically defined risk management and money management parameters that I've plugged into the spreadsheet tell me that my best day to execute a trade is Friday. And so that's why I can say with confidence that I don't know where other people online are getting their information when they write in these blogs that the only days that are probable to trade are Tuesdays, Wednesdays, and Thursdays. Because for me, the best trades are Fridays. And as a matter of fact, as I can see here by my statistics that I've garnered, is that Wednesdays are my worst days to trade. Now, considering that I'm only concerned typically when I'm executing these trades on the what and when of taking these trades, I guess I'd like to use these trade psychology videos to kind of get into the why of some of these issues that I'm that I deal with when recording my emotions objectively and my statistics and whatnot. But I guess Fridays is a good day to trade, because those are the days, for me anyways, those are the days you get extreme moves in the market, like what happened this past Friday when everybody was complaining about getting squeezed out of their shorts. I actually was participating on the long side of the markets when everybody was supposedly getting squeezed. And I guess what happens is that Fridays are the days that the market moves to extreme levels, and considering that my system is a counter trend style that relies on entering the market on extreme levels of price movement, a particular improbable retracements of market moves. Typically, and I've noticed this without even having to keep track of it. Typically, I can see very easily that the days that my system and rules of engagement narrowly guide me into an actual execution, it's typically on Fridays. Because those are the days when the market is moving at its extreme. And if you're a counter trend trader, your best opportunity to take a trade is going to be at an extreme level of market movement in the opposite direction of the direction that you're thinking, about going. So it makes sense that, most of my entries would be at those extremes. And, perfect going into, the psychological and emotional aspect of this, going into that, actually, I could recall a scenario actually last week in which, I think it was last week or a couple of weeks ago, which I took those long entries in the US dollar Canadian market. It actually turned out to be my best trade of the year, because I took 500 pips out of that one particular trade in that market. But I remember I hesitated, I'm going over this topic right now because Jesse Livermore was right in his books in saying that, his biggest losses came when he allowed, other people's ideas to infiltrate his own decision-making process. And the other day when I entered, before I entered that US dollar Canadian trade where I took those 500 pips, I remember reading, on a couple of those blogs that trading on Tuesday, Wednesdays, and Thursdays were the better days. And I allowed that idea to infiltrate my mental state, which my mental state and my confidence in executing my trades based on my system is actually based on these statistics, these probabilities and statistics that I gather here in this Pro Trader dashboard that I put together. And I allowed that foreign, that outside idea of only trading on those days to infiltrate my mental state. And psychologically speaking, on the Friday, the market was trading in that Canadian dollar market. The market closed at 97.79. I had my limit order entered at 97.74. Okay, and over those 5 pips, I missed out on executing a trade at that 97.79 level. I let the market close on Friday in favor of waiting to see what the market was going to do, right, on Monday or Sunday and whatnot, because I allowed this outside idea of trading only on Tuesday, Wednesdays, and Thursdays to infiltrate my decision-making process. Excuse me. So I therefore hesitated on executing my orders exactly as per my clear and defined, narrowly defined, might I add, rules of engagement, which guide me through these treacherous markets. And that emotional hesitation based on that outside idea caused me to hesitate on taking that trade on that Friday and executing that order at 97.79, and being, basically greedy over 5 little pips, 5 measly pips. And I remember on Sunday, I ended up, luckily, actually, I cleared up over the Saturday weekend, the one day of rest that I had, and I cleared up, and I decided that on the Sunday open, I was going to execute that trade no matter what. And across the board on the Sunday market open, the entire market, every market gapped up in favor of dollar strength. That particular market gapped up 30 pips in favor of dollar strength, the US dollar Canadian market. I think it was, I can tell you exactly what date it was and what trade it was right now. Give me a second here. US dollar, it was trade number 87, was it not? It was trade number 87. Right, and I took it on the Sunday market open right here. So US dollar Canadian market trade number 87. And that was taken on September 18th, actually. So that was a couple weeks ago, whatnot. But I decided to actually execute that trade on that Sunday because, where did I go? We didn't even move on it. Just leave it there. Because I woke up and realized that, I needed to have confidence in my trading system and my statistics and probabilities taken on the spreadsheet that were telling me that my best days to trade were Friday. And Saturday I realized I had missed my opportunity to enter the market, and the sooner I enter the market, the better. And on Sunday when the market opened and it gapped up 30 pips, in the euro dollar market it gapped up, I think, in excess of 100 pips. And once I saw that overall strength across every market in dollar, in favor of dollar strength, I decided to execute my orders immediately, and I was able to get into that market. And I remember at first feeling a little angry and frustrated because I had missed out on those original 30 pips, which, when you get in on any move, especially a counter trend move, most of them, you feel a little bit of pain before they start going in your direction. But those 30 pips, those initial 30 pips, really are a confidence booster that help give you the courage to hold on to that position while it continues to make gains in your favor, and in some cases, go against your position until it decides to move in your favor. So, I was a little upset at myself for missing out on those 30 pips because I allowed myself to hesitate on a Friday after knowing that Friday was my best day to trade. Like that particular trade would have helped to boost the fact that Fridays are the best day to trade. So that's what happens, and that's why I'm recording. That's why I'm recording this information here, because it's it's what I need to keep hearing this over and over, to drill this into my head, to make sure that I stay on the path of consistency and disciplined execution of my trading plan. No matter what emotions I may be feeling, no matter what ideas there are out there, I can't, I got, Jesse Livermore was right. If you haven't read it, read Reminiscence of a Stock Operator and Livermore Market Key, are both books written about the life of Jesse Livermore. And, those were one of the ideas he talked about was, staying in your own, and everybody, any successful trader will tell you, you gotta stay within your own, mental framework, working within your, an objective mental state. That's what I'm here to do. And so long as I stay consistent and, using the statistics and probabilities I put together here in this mathematically defined Pro Trader dashboard, I'll be good. So luckily, even though I hesitated on that trade on that Friday, on that Canadian dollar market, luckily it turned out good, and I still was able to take those 500 pips. So that right there even is testament to the fact that, you got to stay consistent and disciplined in trading your strategy, because if anybody was around to see drawdown that I suffered through back in trades number 79s through early 80s, you'll see that, this was my time to win recently, and, sometimes you'll have times to lose too. So it's important to stay disciplined and trading your system, no matter the day of the week. It could, Monday through Sunday, man, you got to be on it. You got to stay on it so that way, I can continue to achieve consistent speculative success. So, I guess that's my philosophy on trading days. And actually my philosophy on trading days is kind of similar to trading during, news reports. A lot of people I've noticed too online, they get the idea of, I saw one idea was staying out of trades when news reports come out. Well, from what I can tell, there's a news report every 5 minutes. So if your rule is to not trade during news reports, you're never going to trade, because there's always news in every market and every part of the globe. So, I got to throw that out the window off the bat, because my job here is to trade consistently, and if I don't trade during news reports, when am I going to trade? As a matter of fact, what I've found is that, especially like, for example, taking a trade on a Friday, what I found is a lot of these guys, like, look, they put out the news that the IMF in the U.S. was not gonna bail out Europe on Saturday. On Friday, they were telling everybody that, yeah, it was a possibility, I guess that's where everybody gets the idea of short squeezing and stop hunting, because on Friday they tell you, yeah, they're gonna bail them out, and then Saturday they come out and tell you, no, psych, it's not happening. But that's why you can't really make. That's why I have the philosophy of not making my decisions on news reports, because it's the same thing as making a decision off outside information that you have no control over. The only thing you can control, the only thing I can control as a speculator is the decisions I make based off of the price analysis that I conduct on each and every market. So long as I maintain my trading state, my trading mental state within that framework, that IPDE, the framework of identifying, predicting, deciding, and executing my trades within my own mental state, I'll be good, as has been proven by the statistics I've put together within my Pro Trader dashboard. So that's what I have to stay committed to, because that is the narrow definition of the trades I'm allowed to take based on my rules of engagement. And being that it's been as profitable as, successfully profitable as I could want it to be, I have to stick to that system, stay committed to it, and stay disciplined to the rules that it dictates for me. So that's how I feel about trading on Mondays, Fridays, and doing news reports. As a matter of fact, what I've noticed is that if anything, when I do enter a trade, the news report does nothing more than to catapult my trade into the direction that I want to be in. So, if you're a trade with the news type of person, I would say that you'd want to make your execution, in advance of the news report anyway, so that way you could take advantage of whatever information it's supposedly gonna help garner. But what I can tell is so far is the news really only serves as a catalyst for the market momentum. And I trade with stops in place anyway, so if the news is going against my turns out to be against whatever position I may be trading in, my stops are always there in play to make sure that I either get out or break even, because my whole point is to try to get to a risk-free trading event as quickly as possible, or I'll be taken out with a very minimal loss. So if the news is against my position, it doesn't matter, because I won't lose that much money anyways. So and at the end of the day, that's what I want to achieve. I don't care if the trading decision is right or wrong, because I know ahead of time that I can't tell the future. So there's no way I can expect myself to know the future every single time. Again, my job is to only position myself in a way to take advantage of the opportunities that the market is going to provide for me. So that's the other issue I wanted to go over in this video. Again, just some notes I had taken for myself that I wanted to record. The other thing was, actually a couple last weekend, 2 weekends ago maybe, I was in a couple trades in the British pound US dollar market, and I had decided to break my rules and close my positions early, because I had asked myself, why should I continue to trade on an overwhelmingly busy schedule? And what happened was that I was moving my offices, and I had to shut down the internet connection, and the markets were a little choppy, and I had to move the entire office, and it was just very hectic, very overwhelming for me, on a weekend. And I felt that the smarter decision would be especially being that my trades were showing a decent profit. I was happy. I think it was somewhere around 100 pips or so. But I felt it was just a smarter decision to, close up shop, get everything stable. Again, going back to the stability in my emotions and my decisions and my operations. If things are just too unstable, it's better to sit in cash, is it not? Why should I feed into the market, money machine of, the market takes victims every day, and I'm not interested in being one of those victims where I lose my money or blow out my account. So that's why, that's the whole point of this psychology video, is just to just ingrain into my head that I just got to stick to my narrowly defined trading plan, as I have been doing, so that I can keep showing these consistent results. So again, if my schedule is going to be overwhelmingly busy, where I can't make objective trading decisions on how to manage my money or manage my risk, it's just better to close the position and sit in cash. So that's pretty much the only time where I think I'll be breaking my rules, is if there's just just too much hecticness going on, and if things are just too crazy, it's just not the situation is not conducive for stable and a stable trading operations. Close up shop. And that's what I did. Took some profits, did what I had to do, got back to the market, and the week after, I think it was this past week, was the week after that, look at that, took 1,000 pips. So at the end of the day, it doesn't matter. Doesn't matter, so long as I just maintain an objective trading mental state, so I could make objective decisions based on good analysis, good technical analysis. I believe I can take the opportunities, especially when news reports come out, to serve as a catalyst for my decisions. I can continue to make profitable trading decisions. Let's go into the next issue. This is the last issue I'll be dealing with here with my trade psychology. I will go. Actually, I'm going to go into a chart for some of this stuff. But I was feeling emotionally anxious at market turning points after the second signal printed to cover my positions, which caused me to decide to sell 2/3 of the position in order to trail my third position, which at the end of the day on Friday, actually it was right before lunch, I ended up capitulating and I decided to close my third contract. Actually, that's misspelled. Because I just felt the market movement was, it was going against the profits I had earned, and I just didn't feel right giving back the money I earned. And I wrote there, I had still felt like cringing when thinking about it. And on my, on the Facebook page, actually, when I did it, I had actually said, let's go over to see that. This is what I wrote when I closed out those positions. I closed all my positions before Friday lunch on a slight retracement of price on much exhaustion. Have a great weekend. This is the position I was talking about. It's in the Euro US dollar market. This gold arrow is the marker for where I entered the market. This maroon arrow is the marker for where I exited that first 2/3 of the position I was talking about. And at this point in time, after I had seen these two signals to cover my positions, based on this third-party trend following system that I purchased, I was feeling a little anxious, about the trade, being that I had seen on online, everybody on the CNBC, short squeeze, blah, 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 short squeeze. You know what I see here? I don't see short squeeze. I see a harmonic. You see, look at this. A is here, B is here, C is here, D is here. This is a harmonic price pattern look here, here's another smaller harmonic price pattern. Here's A, B, C, D on the retracement of the overall larger price pattern. Everybody on CNBC was calling this part a short squeeze. I traded it here on a retracement of a smaller time frame harmonic price pattern on a retracement of the underlying trend. The trend is your friend, is it not? Right? Everybody's calling this a short squeeze, and I took about 175 pips out of that particular market. So that's the point. Is that my job is to position myself with minimal risk, because here was my risk at this blue line. Here was my entry where this yellow marker is indicated. This was my risk, and from this yellow marker to this maroon marker that signals where I covered the position was my reward. So this was probably like a 5-to-1 reward, 6-to-1 reward. At the end of the day, my job again is to strictly position myself in a way so that I could take advantage of the harmonic movements that price prints in every market. And at this point in the game here, I was feeling anxious because it was equidistant A, B, C, D completion, and it just looked like a good time to take my profits. And I wrote down I was feeling emotionally anxious after the second SOS signal printed, because what I like to do is take profits at the third signal. So again, I'm kind of breaking my rules, but considering that it was a Friday and I had already taken 175 pips out of a Friday move, which, like I said earlier, Fridays typically the market typically tends to go to extremes, in which I like to take counter trend moves against the trend. This kind of coincided, even though this is a trend following system that I purchased and I was trading, but this coincided with a possible entry that my counter trend strategy could have taken on against the position I was actually trading at this particular time. So I closed 2/3 of the position and allowed the third position, this is where I was actually only trading the third position here, this last one contract. I let that trail, at price structure, which was signaled right here. See this little spike down in price? That's price structure. So that's where I had my trailing stops. However, at the point, once lunchtime came around, I started getting a little exhausted. Price had already begun to retrace against the position a little bit more, and I decided that was a good enough profit for the day, and I decided to just close the position based on the anxiousness I was feeling, the exhaustion I was feeling, and the fact that I'd already taken profits, and it looked like a good technical spot to take profits at, being that the market was telling me it was already retracing. So there's no need to give back any of those gains to the market. So it was a good spot to take the profits, and that's what I did. I'm just recording the feelings that I was having, and that's the point of this website. So on that note, if you guys are into listening to me chat about my daily executions here in the market and how I'm feeling about the trades that I'm taking and the profits that I'm making, if you like what I'm doing here and the information that I'm putting out, here's my Facebook page, facebook.com/takeyourprofits. Here's my Twitter page, it's at takeyourprofits. If you enjoy this information and if it's helping you out at all, just go ahead and give me a like on either one of those pages. And that's pretty much it for the day and for my trade psychology video, in which I'm taking an objective look at my trading mental state and my trade decisions and all the things that I'm feeling. So this is a speculator signing out. I appreciate you sticking around for this long. Hope some of this information helps somebody out there somewhere. If it does, give me a like on Facebook. So again, this is speculator signing out. Take your profits.